Welcome back to Accrued Interest. Today, February 28th, I want to give you a quick update on one of my favorite stocks, AppLovin, why it's been in the news this week after some short sellers decided to target it, and why I think you should stay invested. Before I go any further, I just want to give a quick disclaimer that everything I say here is for entertainment purposes only, and I am not a registered investment advisor. Now, with that out the way, let's focus on why the stock was down over 20% this week. It's because a number of short sellers, some with some funny names like Fuzzy Panda, all decided to gang up on the stock this week and release a number of reports that had some scathing claims. Now, you're probably asking yourself, AppLovin, isn't that a character from that movie Superbad? I can tell you, even though the name might be funny, this company is actually very real. AppLovin has been a rising star in the ad tech space because in many ways, they're sort of like the Google of mobile gaming. AppLovin software has been really good at matching mobile game developers with advertisers who want to advertise in mobile games. The stock was up over 700% in 2024 as evidence got out there that AppLovin might be able to expand its customer base to e-commerce, which has an addressable market that is multiple times larger than the mobile gaming market. At the same time, advertisers all across e-commerce have been looking for another strong, viable alternative to just buying meta ads. Well, success breeds haters. And after this torrid 700% rise, a number of short sellers came out with a series of reports that was able to tank the stock and put a lot of suspicion in the air. Now, when I say these reports were sensational, these reports had everything, every scary buzzword that you wouldn't want to hear in a company you're invested in. They alleged AppLovin was engaged in accounting fraud. They alleged that they was stealing data from Meta and other data partners. There was also allegations of shady offshore accounts and offshore entities in countries such as Cyprus, Belarus, and other places Americans have to look up on a map. There was even allegations that AppLovin was targeting the children, that they were collecting data from children who are using the mobile games and peddling ads that were sexual in nature to them. Lastly, there were even allegations that one of AppLovin's top shareholders actually had ties to Chinese espionage. All in all, unfortunately, the short sellers were very successful this week. They were able to effectively burn the house down, causing a lot of shareholders to panic sell. But as long-term investors here at Accrued Interest, we understand that it's okay to be disappointed when a stock falls, but you need to stop and think whether or not this narrative has an actual impact on earnings. Something that I admire about this company was that their CEO, Adam Foroughi, put out what I thought was an excellent response to the short sellers on the company's website. He kept it classy. He didn't resort to any name calling or threaten legal action against the short sellers. The company explained that they are in compliance with all the rules and regulations of the iOS and Android App Store. They're not engaged in any fraudulent procedures that are going to get their services banned. Also, common sense would tell you that performance marketers are very sophisticated ad buyers. They would not be spending on this platform if they weren't seeing a tangible return. Adam Foroughi in his note explained that the ads are designed to generate real engagement and revenue for their advertisers. One thing you need to know about performance marketers is that they're different from brand marketers that are just trying to create a warm, fuzzy feeling when you see their ads. Performance marketers, on the other hand, will keep spending on ads as long as the return on advertising spend is above a certain threshold. Lastly, Adam explained that the company's e-commerce efforts were actually going better than investors had anticipated. For the first time in the letter, he gave some new information that they did not share on the Q4 earnings call a few weeks earlier in the beginning of February. In December, using only 600 customers that they onboarded during their e-commerce pilot, AppLovin was able to generate over $1 billion of gross ad spend on a run rate basis during that period. I think that this growth clearly demonstrates the effectiveness of the AppLovin platform. I suggest you check out my Twitter page where I have more explanation of the financials, but at a high level, here's what you need to know. The revenue growth and AppLovin is expected to continue at over 20% a year for the foreseeable future, because the e-commerce industry is multiples larger than the mobile gaming space, and there are a lot more customers that then come on their platform to spend. AppLovin also has one of the most attractive EBITDA and free cash flow profiles, frankly, that I've seen a long time in the advertising space. With all the excess free cash flow that the company generates, they're able to return that to shareholders, and I expect them to be active in their stock buyback program now that the stock has fallen this week. The sell-side analyst community, which was already bullish on AppLovin, came out and strongly refuted all the short sellers' claims. My favorite sell-side report that I thought did a good job refuting a lot of the bear case against the short sellers came from Bank of America. Again, please check out my Twitter page and you can find a copy of the report there. The bottom line, you're going to want to stay long AppLovin, and if you've been thinking for an opportunity to take a position, now's a good time to look. Going forward in 2025, the only way to beat the shorts is through continued execution. I expect that AppLovin is going to surprise the investor base by how successful they can be onboarding more e-commerce customers. I also expect their e-commerce effort to accelerate in the second half of the year when they eventually get a self-service platform and they no longer have to onboard customers manually. And lastly, while this is not central to the thesis, I think it is inevitable in 2025, AppLovin will be included in the S&P 500, and millions of investors all across the country will have shares of this added to their investment account. If you like more up-to-date, real-time information on working through different investment pitches, I suggest you come to my Twitter page, which has had a lot of growth. We're up to about 1,400 followers, so thank you to all the new readers who have been joining me. And as always, don't forget to like and subscribe, and stay tuned to this YouTube page for more updates.